business choices. Entrepreneurs and other business decision makers are frequently faced with choices. There are often a number of alternative ways of using resources. As a result, businesses have to make a choice about which way to use them. Such choices are common in life and are faced by individuals, businesses, and governments. Before we go further, whatever business you start up with, there's always going to be an opportunity cost. Because if you are facing, as you're facing me, you are backing there. So that is it. So the opportunity cost is that other side you cannot look at now. That is it. So it means whatever business we do, those resources we use in doing that business, we can as well use it for other businesses too. But in as much as we have channeled it into this business, we can't use it on that business. That is the point. Do you understand the point I'm making here?
No, I don't get to it.
You get it now.
No.
When we talk about business choices, business is that individual. It's in the individual that decided to make it, right? Okay.
Entrepreneur.
So the point is, if I'm starting up a business, let's take it into this way. I've started educational business. I'm into school. That's my business.
Yeah.
So if I'm into school, it means that was not the only business I could do, but that is what I decided upon. That is the choice I made. So those other businesses that I had the opportunity to do, but I couldn't do, based on the fact that my resources are limited to this, are the opportunity cost.
Yeah.
Do you get it now?
Yeah,
so for every business, not only business, for every decision you make, there's always going to be an opportunity cost. If I'm sitting down here, it means I cannot sit down there. That's the there that I cannot sit is the opportunity cost. Do you get business choice now?
Yeah.
Okay. So for business choice, most of the time, because we are businesses, we have decided to use our resources on one aspect. It means whatever we have decided to use the business or the resources on is the choice we have made. So every other thing that we have that are available to us, but for the fact that we have decided upon that, they become our opportunity cost. That is what business choice is about. So for every choice, for every decision you make, there's always going to be an opportunity cost. For individuals, for businesses, and for governments. So that is the point about business choices. Do you get it now?
Yeah.
Okay. So it said individuals have to choose how to spend their limited budgets. For example, university students, after all living costs have been met, may have 50 euros left at the end of the week. This student would like to buy some new books and the rest. So the point is, we are faced with scarcity. There's always going to be scarcity. As a result of that, we need to make a choice. So making a choice for individuals might be different from making a choice for business, and might be different from making a choice for government. But whichever ways, we are all faced with the same situation, which is choice that we have to make. I think the point is clear.
Yeah.
So for individuals, it's done. For businesses, they have to think about either spending on this or that. And for government spending. If government is spending on education, government might not be able to spend on healthcare. If government is spending on infrastructure, government might not be able to spend on healthcare. So whatever choice we make, there's always going to be an opportunity cost. That is business choice. Is this clear?
Yes.
Any question about opportunity cost there? So that's why opportunity cost is the next best alternative for gone. The next best alternative for gone. So if I'm faced with A and B, I need to choose between A and B. If I've chosen A, then B becomes my next alternative for gone.
Yeah.
Not C, not D. So if you have A, B, C, D, and E to choose from, you choose B, then C is the next alternative for gone. If you have A, B, C, D to choose from, and you choose A, B is the next alternative for gone. So the next choice that you are not making is the opportunity cost. So the choice you made is the real cost, because that is what you're going to spend on. And that gives you economic benefit. Is opportunity cost clear?
Yeah.
Okay. So we have non-monetary opportunity cost. Are you there? For non-monetary opportunity cost, these are opportunity costs that are not, we call them non-monetary because we cannot value them. We cannot quantify them. Do you understand what I'm saying?
Yeah.
Okay. We call them non-monetary because we cannot quantify them. They are not measurable, like happiness, sadness, quality, skills. You cannot measure
Yeah,
it.
you can't measure it. It's,
So if I have decided to train you, and some individuals are not happy about that, their unhappiness is the opportunity cost. It's the non-monetary opportunity cost.
it's non-quantifiable.
Yes, is it clear?
Yeah.
So whatever the point is here, we only have to understand that we have non-monetary opportunity costs, which are things that are not tangible. They are intangible.
Yeah.
That is about non-monetary. Any question about it?
So what does this have to do with like businesses?
Yeah, it has to do. For example,
Like, what does it affect?
the effect, I'll tell you. So just like a business person, like an individual who set up a business and he made profit. As soon as he makes profit, he or she decides to put the profit back into the business rather than taking his family to for a trip in Bahamas. So yeah, he or she has decided to put the profit back to the business. Do you think the family will be happy?
No.
So there's no monetary opportunity cost there. So the family are not happy, but the business is making profit. The profit has been put back into the business for expansion.
Yeah.
So that situation that the family are in right now is non-monetary.
Monetary. Okay.
Is it clear?
Yeah.
So go to business choices and trade-offs. Are you there?
Yeah.
So businesses have to make countless decisions, and decision makers are frequently faced with trade-offs. This means that opting for one choice involves compromising another. For example, a company that prides itself on attention to detail must often sacrifice the speed of production. If a business wants to build up stock, it must sacrifice cash. So there are many much such examples. So it's for trade-offs, you might see trade-off as the same as opportunity cost, but mostly it's not. For trade-offs, the benefit you are not going to gain, that is the trade-off.
Yeah.
So just like now, you want to keep stocks. If you are keeping stocks, you can't have cash.
Yeah. You have
That's
to
the
give
trade-off.
something to gain something.
So that benefit you're not going to be able to enjoy based on the choice you make is the trade-off. Do you get trade-off here?
Yes.
So one very important trade-off is that between risk and reward. It is often necessary to take bigger risk in order to receive higher rewards. However, with high risk, there is the danger of large losses. For example, it was reported in the media that before 2008, banks granted mortgage to high-risk borrowers. The potential return were high, but unfortunately, when the property market collapsed, many borrowers could not repay their loans. As a result, some banks also collapsed. Here, there's a trade-off between risk and
reward.
rewards. The trade-off is this: if you are taking a huge risk, the reward is also high.
But the losses are also high.
It's also high. So if the risk goes bad,
If it doesn't pay off, that means
Then
you
a
lose
big loss.
You lose a lot.
but most of the time, financial institutions, we did that in economics. Financial institutions, they take that huge risk because they know it brings huge rewards. But because they have what we call a bailout from the government, because banks are considered too big to fail. So,
Yeah.
because if they do fail, it's going to affect the economy as a whole. A lot of people are going to lose their jobs. A lot of savers will not be able to get their money back, and demand within the economy would fall. So banks will always want to bail banks out, or government would always want to bail banks out. That is why they mostly take risk, high risk. Do you understand? So that is moral hazard. We call it moral hazard.
Why?
We call it moral hazard because the consequence of their action, they are not going to be faced. They are not going to face the consequence of their action. Others will face it. So that makes them to act carelessly.
Yeah.
Do you get it?
Yeah, okay.
So especially for banks. Any question about that?
No.
So look at the risk aversion now. Higher risk at the red, higher reward. So the bigger the risk, the bigger the reward. Any question about that? Any question?
No.
So that takes us to, we go down, right? Initially, they said one important decision for an entrepreneur is whether to set up a business in the first place. So it's a decision too, either to set up or not to set up.
Yeah, you have to think about the benefits.
Yes, you have to. We call it cost benefits. Cost and benefit something in economics anyway.
Yeah.
So the benefit of running your own business may include one, independence, as long as I'm in complete control and are free to make all decisions. So the point is, as soon as you are setting up your business, you weigh up the advantages and the disadvantages. Then you decide. That is the point. So what are the advantages you could have setting up your own business? Independence. That means you have complete control and you are free to make decisions about your business. 2, flexibility. You can now arrange the balance of life, not your employer deciding how you live your life. Clear?
You can base your life around, you can base the work around your life, not the other way around.
Yes.
Yeah.
The third one, the chance to make more money than might be earned in employment. You can't be wealthy. You can't be richer than your boss, your employers. So that means right now you have the opportunity to make more and be successful. Job satisfaction and the sense of achievement in building something from nothing. So if you are setting up your business, it's your business. So the sense of attainment, achievement is always going to be there. Oh, I started from zero. Just like my YouTube channel, started from zero, and now I'm here. So it's mine. So the sense of achievement is always seen based on the fact that I'm seeing the progress. That is how business works. I think it's clear.
Yeah.
But if it's other people's business, you cannot say that. You cannot claim it to be yours. The chance of becoming rich, yes. If the business succeeds, you can become richer. However, there's a trade-off. So many entrepreneurs leave their jobs to set up a business. They give up financial security that a regular salary from employment often provides. That a regular salary from employment would always provide. Because in as much as you have set up your business, it's unlikely that you work for other people. So that means you shouldn't be expecting salary monthly anymore.
Yeah. It's you're unstable. You don't have a stable flow.
Owners of small businesses are responsible for all day-to-day operations. So for small businesses, you don't have the financial capability to employ managers. So that means you have to be there every now and then. You get that?
Yes.
The demand for running a business may result in lack of free time. Yes, because you should be punctual. You have to spend most of the time there until the business succeeds. And even if the business succeeds, you're just starting again. Because then you have to become a leader.
Exactly.
And more responsibility. Business owners need a variety of skills to be successful. Advertising, marketing, interviewing, hiring, management, stock control, accounting, and all parts of entrepreneurial responsibilities. And these things are huge, are crucial. If owners operate as sole traders, they have unlimited liability. So this means that personal assets are not protected if the business starts up to run up debts. The last one is that because if it's an unlimited liability company like a sole trader or partner or a sole trader, whatever happens to that business affects you. So that means you cannot separate the business from the owner of the business.
Yeah, business takes a loss, you take a big loss. So.
Clear. Potential entrepreneurs would have to give this trade-off serious consideration before taking the risk. Some examples of the common trade-offs in business are outlined in the table. Look at common trade-offs here. Firms also have to consider the trade-off between holding liquid assets and investing more in productive assets, such as machinery. By reducing the amount of liquid assets held, there's a risk of cash flow problem. However, investing more in productive assets like capital goods may increase profitability.
What's liquid assets?
Like stocks.
Stocks. Yeah.
So the trade-off here is if you are keeping more assets, if you are keeping more stocks, you might have cash flow problem. No, you might have cash flow problem because it means those cash has been held in stock.
You don't actually have it.
You don't have it until it is being sold. Yeah. If you are investing in more capital goods, capital equipment, it allows you to have. You also be having cash flow problem,
yeah.
But it allows you to increase your productivity. So there's always a trade-off. I think the point is clear.
Yes.
The second one, directors of public limited companies have to find the right balance when distributing corporate profits. They can reinvest profits and hopefully increase future profitability. However, shareholders may prefer higher current dividends payment and less reinvestment. So there's always a trade-off. Profit is made. So dividends, shareholders would want higher dividends, not the other way around. But owners of the business, directors would want to reinvest, we call it retained profit, might prefer to put more profit into the business to expand it, but directors will not want that. So if owners will not, shareholders will not want that. So if directors are putting more profit back into the business, this brings about anger or conflict between the interest. There's going to be conflict between the interest of shareholders and the interest of directors. So
Yes.
there's a trade-off. Do you get it here? Firms might choose to take a more ethical approach to their operations. However, this is likely to come at a cost, as investment in cleaner technology might be required. So, ethical stance comes with a cost. You have to spend more, and that might reduce your profitability. That's the trade-off. Clear?
Yeah.
A common trade-off is that between higher profit margin or higher turnover. So, if you are thinking about higher profit margin, you might have to increase your price. Do you get the point here?
Yes.
So, for some businesses can often sell more and raise turnover, but this may come at the expense of lower prices and
Lower
reduce
prices,
profit margin.
reduce,
So if you
yeah.
want a higher profit margin, you can increase price. But if you want a higher turnover, sales turnover, you have to reduce price. So these are possible trade-offs when it comes to making business decisions. Is it clear?
Yes.
Then weighing up trade-offs. So to weigh up trade-offs, before you make trade-off is also a decision, you know. So before you make that decision, there are things you have to put into consideration. The first one is obtaining information. How do you obtain information? You check the advantages and disadvantages of the information you've gathered. You have to gather information,
Yeah.
statistics, past records, research. So as soon as you gather this information, then the decision you have to make, the decision you are faced with choice, right? So if I'm making choice A, if the decision is about making choice A, what are the benefits of choice A? What are the setbacks of choice A? What are the benefits of choice B? What are the setbacks of choice B? Which one is more and less? Then you make the best decision. That is obtaining information. Is it clear?
Yeah, which one is worth it?
Which one
Yeah.
is worth it? You balance the short term with long term. So when you're balancing the short term with long term, it simply means, do you want the benefit of now or the
Okay.
benefit of the future? So the benefit of now, how is it going to reflect in the future? You have to think about that. So just like, training your workers now. If you are training your workers now,
You lose.
yeah, you might lose.
You lose in the beginning, yeah.
You might incur more cost, more expenses to you. But
increase
in the
productivity,
future, it will increase the productivity. So you
and
think about it.
Increase profits. Yeah.
That's about balancing short term with long term. Then you measure support, because whenever you are making decisions, you have people around you. Yes or no?
Yeah.
So you involve experts. So expert views are also important. So when expert views are being put into consideration, you see, you have 7 people here based on they are experts. You have 7 people, they are experts, and they want to you are deliberating about the decision. So what is their view about it? More are supporting or less are supporting. If more are supporting, then you can go on with it. But if less are supporting, then you should think again about it.
Yeah, because the support is really important.
It's very important because they know they are experts, so they're going to give you an expert view about that choice you want to make. Any question about that? So that's about trade-off. Any question?
No.
Does it end the chapter?
Yes.
Okay. So that ends chapter 20,
That ends unit 1.
unit 1. Thank you.